Welcome back to the deep dive. Today we're taking a really close look at Indian infrastructure, specifically high-speed rails and metros.
That's right. We've got the Q1 FY26 investor presentation for TITAGARH Rail Systems Limited TRSL.
And our mission for you today isn't just, reciting numbers.
No, definitely not. We want you to grasp the massive strategic pivot TRSL is making. They've always been known as India's big freight wagon maker.
The market leader, yeah.
But now we're tracking this really aggressive move into high-tech passenger rail. And it's all backed by, frankly, unprecedented government spending on infrastructure.
Okay, so let's lay the groundwork. TRSL, established back in 1997. And like you said, market leader currently holds about, a 25% share in Indian wagon manufacturing? That's their history, their base?
It is. And here's a really crucial financial point to start with. Even with this huge transition and major capital expansion planned and underway, the company is still net debt negative.
Wow, okay. That's significant.
It really is. That strong balance sheet gives them the firepower, the flexibility to go after these enormous high-value contracts.
And they're not small players either, manufacturing scale.
Pretty substantial. Current capacity is 12,000 freight wagons per year.
Okay.
And 300 passenger coaches per year. Now, that 300 coach figure, that's the number that's about to become much more important.
All right, I see where this is going.
It is. But first, let's look at the actual results for Q1 FY26. That's the quarter ended June 30, 2025. We have to start with, a short-term operational reality check.
Okay, what happened? There was a dip.
Yeah, a dip in output. Wagon dispatches came in at 1,628. That was definitely down from previous quarters.
And the presentation gives a reason.
It does, very specifically. It stated extremely poor supplies of wheel sets from Rail Wheel Factory, Bangalore, so it wasn't a demand issue.
Ah, a supply chain bottleneck, physical components.
Exactly, purely physical. The good news, though, is they noted right in the report that this supply issue has since normalized.
That's good to hear. But I imagine that crunch hit the Q1 financials directly. We should probably clarify crore for listeners, too.
Good point.
Yeah.
1 crore is 10 million rupees.
Right.
So when we say these figures in crores, think tens of millions of dollars. It gives you a sense of scale.
Got it. So the financial impact.
You could see it clearly year over year. Because of that wheel set shortage, revenue from operations down 24.78%.
Ouch.
EBITDA, that's earnings before interest, taxes, depreciation, and amortization, it dropped 26.9%. And profit after tax, PT, took a big hit, down 40.05% compared to Q1 last year.
That's a steep price for a temporary shortage. But okay, beyond the headline numbers, does the segmental performance tell a different story, maybe a more strategic one?
It absolutely does. And this is where it gets really interesting for understanding their direction. While the overall company result was pulled down by the freight rolling stock segment, FRS.
Their traditional business.
Right. The newer passenger rolling stock segment, PRS, actually showed, huge momentum.
Okay, break that down for us.
Sure. FRS revenue was still the big piece, over 601 crores. But PRS revenue came in at 77.43 crores.
Which might not sound huge on its own.
But the key indicator is the growth. PRS revenue jumped 27.23% year over year.
Ah, okay. So even with external problems hitting the main business, the strategic shift into passenger rail is visibly gaining traction.
Precisely. And the targets they've set for passenger rail growth aren't just small steps, they are explosive.
How explosive?
Well, consider this. The company produced only 12 passenger coaches in the entire previous fiscal year, FY25. Just 12. Their target for this year, FY26, around 120 coaches.
Wait, from 12 to 120 in 1 year?
Yep. That's essentially a 10-fold ramp-up in production, in commitment, within 12 months.
That's ambitious. A 10-fold increase needs serious execution. Is there evidence they're actually hitting the milestones needed for that kind of ramp-up?
There is. And it's tangible, stuff you can see on the tracks. They've hit several key milestones already.
Like what?
Well, the first train TRSL manufactured for the Bangalore Metro. It was inaugurated by the Prime Minister in August 2025. That's a massive public validation.
Okay, that's a big one. What else is in the pipeline?
It's looking pretty full. They kicked off prototype production for the Ahmedabad Metro in Q1 FY26. First train dispatch for that is expected around Q3 FY26.
And the big one, the Vande program, that's the high speed, right?
Yes, exactly. Vande is really the cutting edge of Indian rail tech right now. And TRSL started production of the very first car body for the Vande sleeper train in Q1 FY26.
Sleeper version. Okay. When do we expect to see that?
The first prototype for that crucial project is slated for Q2 of FY27. So next year.
Managing all this work requires serious physical capacity, though. What's the end game for their production facilities?
The goal is crystal clear. Get to the full rated capacity of 250 to 300 Metro cars per year by Q2 of FY27. That timeline shows they aren't just collecting orders. They're actively building the industrial backbone to become a major player in this high-tech rolling stock game, like almost immediately.
Which naturally brings us to the order book. You can't ramp up production like that without confirmed work. And the numbers here are, well, they look staggering.
They are genuinely immense.
Yeah.
As of June 30, 2025, just the company's standalone consolidated order book is roughly Rs 12,695 crores.
Okay, that's already huge.
But wait, there's more. If you're really analyzing TRSL, you have to look beyond their standalone books. You need to factor in the joint ventures.
Right, the partnerships, they add another layer.
A massive layer. When you add their share from strategic JVs like the Ramakrishna TITAGARH Rail Wheels venture for wheelsets and the Vande Bharat consortium with BHEL.
How much does that add?
It adds another Rs 13,326 crores to their share of the workload.
Okay, hold on. So 12,695 plus 13,326. We're talking over Rs 26,000 crores combined.
Exactly. A combined workload stretching out for years. That's well over $3 billion in total order value right there.
Wow. Okay, but remembering that Q1 wheelset issue, how do they plan to actually execute an order book that enormous? What are they doing to make sure they can deliver?
That leads us straight to a very strategic real estate move they made. To guarantee they have the space to execute, they secured a 99-year lease.
For land? Where?
For about 40 acres of contiguous land right next to their existing facilities in Uttarpara. Cost them around 137 crores.
40 acres is significant space. Is it just for building more factory sheds, or is there something more specific?
It's more specific. It's all about certification and high-tech quality control. You can't just build high-speed trains and metros.
They need rigorous testing.
Extremely rigorous. This land gives them crucial, dedicated areas specifically for testing and commissioning those high-value metro coaches and the Vande Bharat trains. You absolutely need dedicated test tracks and facilities for this level of technology before delivery.
That makes complete sense. Okay, let's shift to the tech itself. The presentation mentions a big focus on design in India. At Bharat, they have design centers up and running already, right?
Yes, in Kolkata, Hyderabad, and Bangalore. And their technology roadmap is, again, highly ambitious.
How so?
The company has publicly stated its investment goal. They want full capability to manufacture both stainless steel and aluminum metro coaches.
By when?
By Q1 FY27.
Why is having both so important? Especially the aluminum part.
Well, stainless steel is the standard for many metros now. But aluminum is the future, especially for high-speed rail and next-year metros globally.
Because it's lighter.
Exactly. Lighter means better energy efficiency, faster acceleration.
Yeah.
But it's much trickier to work with. It requires specialized welding, different fabrication techniques, whole different infrastructure setup.
So if TRSL pulls this off by Q1 FY27...
They will literally be the only company in India with that dual capability stainless steel and aluminum. That's a massive technological advantage, a huge competitive edge, not just in India, but potentially for export too.
A really powerful differentiator. Now, this intense focus on rail tech seems to have driven a big corporate restructuring move too, didn't it? The shipbuilding business.
It did, yes. A very important strategic decision. The board approved transferring the entire shipbuilding and maritime systems business SMS into a new, wholly owned subsidiary.
Called TITAGARH Naval Systems Private Limited.
Correct. It's a classic corporate move to simplify the parent company and sharpen its focus.
But why spin off a business like shipbuilding? I mean, the notes say it's delivered over 35 vessels. It sounds like a capable unit.
It is capable, but the rationale is about strategic clarity and where to put the big money, the capital allocation. By moving SMS out.
TRSL can focus everything on rail.
Exactly. All management attention, all capital investment, all engineering brainpower can be laser focused on the core railway systems business because that's where the biggest growth, the highest value potential is right now.
So for investors, it makes TRSL a clearer pure play bet on Indian rail.
Precisely. And the new naval systems subsidiary isn't disappearing. It's free to pursue its own growth in shipbuilding. They're aiming for what? 12 to 16 vessels per year capacity at their Falta facility. It lets both businesses focus.
Right, prioritizing the main growth engine while letting the other part run independently. I also saw a note about a similar mandate for their defense and bridges businesses.
Yeah, similar logic. They've tasked a board committee to figure out a strategy for those segments too.
Yeah.
Maybe bring in joint venture partners.
Again, keeping the focus on rail.
Absolutely. It's about making sure those other assets create value, but not at the expense of distracting from the primary strategic goal, dominating the rail systems market.
And all this internal maneuvering, this massive execution challenge, it's happening while the entire Indian railway sector is undergoing, well, just a monumental transformation. The tailwinds are huge.
Unprecedented is probably the right word. We need to talk lakh crores again here. 1 lakh crore is 100,000 crores, or 1 trillion rupees. The Indian Railways capital outlay, their spending budget for FY25 alone, is 2.65 lakh crores.
That's tens and tens of billions of dollars just for this year's railway spending.
Correct. It's a colossal amount of money being pumped into the system.
And it's driven by some equally huge targets. On the passenger side, what are they aiming for?
The target is immense. Increase annual passenger carrying capacity to 1,000 crore. That's 10 billion passenger journeys within the next 4 to 5 years.
10 billion. You can't do that without a massive fleet overhaul. Not just tracks, but trains. Lots of new trains.
Exactly. And the freight side is just as ambitious, the goal. Increase the railway's share of freight traffic taking business from trucks, essentially from about 27% now up to 45% by 2030.
That kind of shift needs wagons. How many?
The estimate is it will require procuring somewhere between 1 and 1.2 lakh incremental wagons. New wagons.
Just the wagons alone, that translates into what kind of market size?
Just for wagons, that single objective represents a market opportunity estimated at somewhere between 35,000 and 40,000 crore rupees.
Wow, and that's TRSL's traditional strength.
It is. But remember, the high-margin, high-tech growth is really shifting towards passenger. The Vande Bharat opportunity alone is estimated to be worth maybe 50 to 60,000 crores.
50 to 60,000 crores just for Vande Bharat trains.
That's the estimate, fueled by that national target of launching 400 Vande Bharat trains in the coming years.
And the government basically put its money where its mouth is in the latest budget, right? Union budget FY26.
They absolutely did. Signaled clear intent. 200 new Vande Bharat trains, 100 Amrit Bharat, 50 Namo Bharat, plus 17,500 general non-AC coaches. That entire pipeline, it flows directly into TRSL's newly focused business model.
Incredible. And then there are the metros, urban transit.
Can't forget the metros. The government target is to more than double the total operational metro rail network across India, up to 1,700 kilometers.
Doubling the network, that means thousands of new coaches needed.
Estimates suggest around 5,000 new metro coaches will be needed in the near future. Across all the different initiatives, Metro Light, Metro Neo, the main lines. This is exactly why TRSL is ramping up that coach capacity so aggressively.
This huge pipeline isn't just theoretical then, it's translating into actual upcoming contracts.
Yes, the source material specifically points to high-value tenders expected between late 2025 and late 2026.
What kind of numbers are we talking?
We're looking at metro coach contracts worth around Rs 15,800 crores, and Vande Bharat tenders potentially worth a massive Rs 72,000 crores. The runway for growth here is years long, decades potentially.
Okay, so let's try and synthesize this for you, the listener. What are the core takeaways here?
I think the main thing is this. TRSL is fundamentally changing its identity. They've tackled immediate risks like that supply bottleneck with things like the strategic land buy. They're cleaning up the corporate structure with the shipbuilding spinoff to focus resources.
And they're shifting hard from being, the reliable, steady wagon builder
to becoming an agile, high-tech passenger rail systems powerhouse. And it's all being turbocharged by this enormous wave of national infrastructure spending.
But success hinges entirely on executing that gigantic order book and really leveraging that tech lead they're building, especially in metros.
Absolutely. Which leaves us with maybe a final provocative thought for you to consider.
Go on.
TRSL is pushing hard to be the only company in India with full capability in both stainless steel and aluminum metro coaches by Q1 FY27. Now, aluminum tech is highly sought after globally for efficiency, for speed.
Right.
So given the sheer scale of India's own network expansion, which would give them massive domestic volume and experience, and the global hunt for high-quality, maybe more cost-effective rolling stock, how soon could TRSL's dual capability position them not just as an Indian leader, but as a serious challenger in the global rail export market? Something to think about.
Definitely something to think about.
Oh.
Until the next deep dive, keep learning.